Hello and welcome to Morning Trade on Moneycontrol with me, Nandita Khemka. Over the course of the show, we'll be talking about the trade setup, some actionable trading strategies, and of course, we'll be getting your queries answered during the course of the show with our guest. But before we do that, let's take a look at what the global handover is looking like this morning. Well, stocks in the Asia Pacific open largely lower as investor sentiment weakens ahead of the new year. SGX Nifty is signaling a negative start for the Indian market. Meanwhile, Brent crude trades near its 3-week highs. Russia has banned oil exports to countries participating in oil price caps. And it was a mixed close on Wall Street. Dow closes higher while an 11% fall in shares of Tesla sees the Nasdaq close with a cut of nearly 1.5%. The S&P 500 is also on track for its worst year since 2008. Will 2023 be a year for stock pickers? Which stocks are looking fundamentally strong for the new year? We get you top bets from Religare for the new year, and stocks in focus today are SP Apparel, Vikas, Nigam and India Pesticides. Well, let's get a guest on board for the show. Rajesh Palviya of Axis Securities is joining us this morning. Good morning, Rajesh. Good to have you on the show. Well, looking at the Nifty, we saw a good run over the last 2 days. But this morning, SGX Nifty is indicating a cut of near about 100 points or thereabouts. What is the setup looking like for today? Do you expect Nifty to take out that 18,000 mark?
Good morning. Yeah, so we have seen a last 2 trading session. It was a short covering action we have seen in the market, and Nifty able to cross 18,100 also. But looking at the overall scenario till expiry is 18,200, 18,300 are the major call concentration zone. And even in the today's session also, we have seen some aggressive call writing at 18,300, 400 strikes. So higher side supply is going to remain till expiry. Until we are not able to cross above 18,250, 300 zone, we'll not be able to see any, substantial short covering action or call unwinding action in the market before this expiry. So for expiry point of view or for next 1 or 2 trading session, we are expecting that it's going to be a range bound session. 18,000 again is likely to act as a immediate support area. If at all we breaks below that level, then again, possibly we can see further more profit taking in the market. But as of now, looking at the setup, the put writers added their position at 18,000, even 18,100 strikes. So they'll try to defend this 18,000 level in the today's session. So it's going to be a very tight range for the day. 18,000 to 18,150 or 200 could be the possible range for the day. And both side the trade setup we are going to have. So our advice would be if Nifty moves near to 18,200, 250 zone, one can initiate short with the stop loss of 18,300. On the lower side, if it comes near to 18,050, 18,000 level, it's again, buying opportunity for, trading perspective. So both direction trade one can initiate in the market. Even on the, if you look at the Bank Nifty setup also, Bank Nifty is now trading above 42,500 level, which is immediate support area for Bank Nifty. If he breaks that level, then next major support based on the put concentration is existed around 42,000 level. So for Bank Nifty also the range is 42,000 to 43,400 is the range for next 1 or 2 trading session. Either side breakout or breakdown will decide the further direction from here onward for both the indices.
So 18,000 will be acting as a support for the Nifty, and buy on dips is the strategy that Rajesh is recommending. Rajesh, hold that thought. We'll come back to you. But let me also introduce on the show Siddarth Bhamre of Religare Broking. Good morning, Siddarth. Good to have you on the show. Well, let me start by asking you a question about the markets. 2022 was a pretty volatile year for the markets. We saw lows of 15,000 on the Nifty, and then we managed to hit record highs recently. Given the fact that we are in a better position compared to the US markets, which are on track to post the worst year since 2008, do you think the valuations in the Indian markets are looking a little stretched? Given that, how would you advise investors to approach 2023?
Good morning, Nandita. Thanks for having me on the show. So yeah, you have put all the data points and scenarios aptly. That US markets are not doing well, and last year we did pretty well for ourselves. Macro situation has not changed. India remains as a positive place to be in global scenario. Last time also we spoke, and we mentioned that how India is better placed compared to US or Europe, as a matter of fact, even China. But then a good stock is a good buy at a good price. And at 18,500 plus levels, we were not comfortable with valuations. Earnings didn't disappoint, but earnings were not so substantial that it would justify these higher valuations. And last year, what has happened that US markets, European, Chinese markets, they have not done well. We have done pretty good. So the premium at which we are trading compared to the global opportunities has substantially increased. Now, what I'm trying to highlight over here is that we may not, we may not see a very big correction as such, but the kind of outperformance we have seen to all these global markets, I think that kind of outperformance may not be visible in coming year 2023. Even if you look at on absolute basis, Nandita, last 15 months or so, this market has actually not gone anywhere. You have seen that this is time-wise consolidation happening. In June, there were talks about that market would crash, bear market. And now, just a month back when we were near its all-time highs or we made new highs, we were talking about bull market and Nifty targets of 21,000, 22,000, depending upon how optimistic you are. But from 1 year perspective, this market is in a range and this market has become a stock pickers market. Even you take any sector, you will see laggards as well as outperformers. So this is interesting time. There will be portfolios which are doing really great, and there will be portfolios which are correcting even if market is not correcting. So it all boils down to what stocks you have in your portfolio and what kind of alpha they are generating. So that's what we are trying to identify in Religare.
Sure. Sid, you mentioned that 2023 will be a stock pickers market. So on that note, let's also talk about some of the stock bets from Religare. I've seen that you've chosen Maruti as a stock pick. Now, this stock on a 6-month basis maybe may not have done much, but on a YTD basis, it's up somewhere around 10% or so. We've also seen demand picking up when it comes to passenger vehicles. Do you expect this demand to sustain going forward? And is that why you've chosen Maruti as a top bet?
So there are multiple reasons, Nandita. Firstly, not just 1 year or 6 months. Maruti has been an underperformer in last 5 years. In fact, last 5 years, the stock has not done much to itself. If you've invested in Maruti 5 years back, your returns are next to nothing. Now, as you mentioned that, the sales numbers are increasing. And we are now at 2018 levels where sales number were pretty high. If you recall, though pandemic happened in 2020, auto sales number start dwindling even in 2019. The peak of auto numbers was seen in 2018. So if you remove the pent up demand which we saw in early part of 2021, the best numbers are coming now. In the month of September, October, we saw best of numbers. Now, interestingly, the percentage of utility vehicle like, Brezza, Ertiga, Vitara, where margins are high, these vehicles, the percentage has increased in the sales figure, which augurs well. At the same time, if you look at valuation, Nandita, though I said that last 5 years, the stock has not done anything, but 1 year forward earning perspective, Maruti is now available at the cheapest valuation in last 5 years. So earnings have caught up, numbers have increased. Yes, company had lost market share from 51, 52% to 43%. Management is saying that they will gain market share. So even if there is 1-2% increase in market share, which is quite likely looking at their new products, which are actually existing product, but the CNG addition, I think that market is accepting pretty well, and that would augur well for Maruti. So at current levels with a PE of around between 25 to 27. It's available at very cheap valuation, and we are anticipating that it would be one of the strong outperformer in Nifty 50 stock.
Well, Maruti expected to accelerate going forward, according to Sid. Sid, you also picked up Voltas as one of your picks. Now, this stock has been in a steady downtrend, as far as I can see. What made you choose this one?
So, just like I said, Nandita, a good stock can be a bad investment at a bad price. Similarly, a good stock at a right price would be a good investment. So now what we are seeing is, if you recall that when pandemic happened and then work from home wave started, market participants, market become very optimistic on this space that there would be a lot of consumption happening. People would be working from home. Housing market is doing great. And Voltas and related names outperform big time in a market which was also doing well. But names like consumer durable names did really well. And then when normalization sinked in, the valuations were very, very high in Voltas. Plus, just like Maruti, Voltas too lost its market share. It is still one of the largest player in AC market, but it lost its market share and growth rate was not very substantial. So from 1 year forward earning, which we saw around 70, in peak of bull wave for Voltas, that was around Jan 2022. This stock has corrected substantially and now available somewhere around 35 1 year forward P, which is where average this stock has traded. Now, to ensure that it doesn't lose market share, management is taking a lot of actions. We are quite optimistic that from current levels, the sales are going to improve in Voltas. At the same time, home appliances business, that is where the entire this space is shifting or they are diversifying. And this company has tied up with one of the home appliances company and formed a 50-50 JV, which would ensure that there is a good amount of diversification into products where the margins are high. So this is a good stock. It was not available at a good price, and that's the reason there was a huge correction. As I mentioned, market share was reducing. And at current levels, I feel Voltas has very less downside. Valuation support is there. And we are seeing all the levers which would support growth going forward. So hence it's a buy.
Sid, I also see that you have a pick from the IT space. Now, IT shares have seen a major correction. Demand is looking cloudy in the wake of recession fears in the US. So which is this one stock that you're picking from the IT basket for the new year? And what's your rationale behind that?
Yeah. So, Nandita, we do like IT stocks. So, SCL Tech, Infosys is a buy for us. We have selected a Birla Group company, Birla Soft. Now, that is one stock which has underperformed big time. Reason being that unlike other IT companies, the lion's share or 82%, 83% of its revenue comes from US market. And most of the concerns related to slowdown were coming from US market. And that's the reason Birla Soft has, underperformed big time. But again, same rationale. This is stock pickers market. You need not chase momentum stock. You need not chase stocks which are doing really well. But if the story is sound and if markets have been, I won't say irrational, but have punished stocks for, their overexposure to a segment, but nothing much has changed. If you look at IT management, and I'm not talking about Birla Soft, but the other management which have come on various channels and spoken, and in their con calls as well, they are optimistic. They are not talking about yes, there might be a slowdown, there might be a recession kind of scenario in US, but then the spending of US companies have shifted from revenue enhancement to cost optimization. And whether it's revenue enhancement or cost optimization, IT plays an important role. So IT spending continues in US, and I believe that market has punished this stock enough. And from current levels, again, like Voltas I mentioned, the downside looks limited in this stock from valuation perspective. At 14.5 1 year forward P, I think this stock is quite cheap. We haven't seen this stock gone below, if I'm not wrong, around 11, 12 P. So valuation support is also there at current levels, and hence we are suggesting to buy.
Well, Birla Soft, Maruti and Voltas are some of the picks from Religare for the new year. On that note, Sid, thanks a lot for taking out time and joining us this morning. Wish you and your entire team a very happy and profitable new year ahead.
Nandita, wish you the same and your team as well. Thank you so much.
Thanks a lot, Sid. Well, going back to Rajesh, thanks a lot for waiting so patiently for us. Rajesh, let's break it down to specific stocks now. Talking about SP Apparels, Ashish Kacholia has offloaded a little over 0.5% in the counter. Now, if you look at the stock, it's down over 20% in the last 1 month. How are the charts looking like going forward? Do you expect some weakness, the weakness to continue going forward for this counter?
So in last 4 5 weeks, if we look at the setup, stock is continuously in downtrend, forming a lower low formation on the weekly chart. Stock has broken down its important support area, multiple support area of 314 level. So looking at the near term as well as the short term chart, yes, there is a weakness in the stock. The stock is now trading below all its important moving averages, 50, 100 and 200-day moving, which also adding up, weakness on the near term, short term perspective also. So looking at the overall scenario, if it continues to trade below 320 level, then possibly stock can go down further towards the next level of 270 to 260, which is the next important support area for the stock on the downside. So overall, if we analyze the long-term setup, stock is now showing some sort of liquidation, and we can see furthermore downtick towards 270. Those who have already sold or those who wants to exit, keep a stop loss of 320. And if it's remain below that level, then possibly it can go down towards 270, 260 zone.
Right, the next stock on my list is Rail Vikas Nigam. It has got a project implementation contract in Maldives at a cost of 1,500 crore rupees or thereabouts. Now, if you look at the stock, it has shaved off somewhere around 15% in the matter of 5 days. More weakness going ahead for this counter, Rajesh?
So last month we have seen a very strong rally in most of the railway related theme stocks, and RVNL has also moved up quite significantly in the last month itself. But in this month, yes, there is a profit taking, we can say. But looking at the overall setup, stock is correcting, but still holding the ground on the short to medium term setup. If stocks continues to hold above 60 level, then possibly again we can see some pullback action towards 68 to 72, which is the next immediate hurdle on the higher side. So looking at the overall scenario, yes, one can remain long in the stock. Keep stop loss of 60 if you are already holding or if you are buying at the current level. Because overall setup for the stock is bullish. Last month rally is still intact, and we believe that around 60 stock will get again buying action or support buying action in this corrective move.
Right, setup looks bullish for Rail Vikas Nigam. The next stock on my list is Indowind Energy. Rights issue will be opening on 27th of January, which is priced at 12 rupees a piece. If you look at the counter, it was fairly buoyant in yesterday's session. Do you expect it to cross or hit levels of 20 going forward?
So looking at the overall setup, since last 7-8 months, nothing is happening in terms of price action for the stock. Stock is moving in range of 12 rupees to 18 rupees since last 7-8 months. Even if we look at the near-term setup also, until the stock not crosses above 16 rupees, it will remain in the consolidation only for this band only. On the lower side, 12 rupees is the support area, 16 and 18 are the hurdle for the stock. So major action on the upside will come above 16 only. If it crosses and close above 16 level on the weekly closing basis, then only we can see some buying action towards 18 to 20 level. So our advice is those who wants to wait and those who wants to buy and hold for longer period, then only initiate buy at the current level, because looking at the setup, we believe that some more consolidation for some more month is going to happen in this stock.
Right, the last stock on my list is India Pesticides. Now, one of its subsidiaries has got environmental clearance for setting up a new manufacturing unit in UP. If you look at the stock, it was it did fairly okay in yesterday's session, but on a 5-day basis, it has shaved off somewhere around 5%. Going forward, would you advise somebody to buy into this counter?
So stock is in continuous in downtrend, series of lower top, lower bottom formation is there on the daily chart. Looking at the short-term setup, stock is now trading below all its important moving averages. So looking at the setup, we believe that some pressure is going to continue in the stock until the stock not crosses about 260-65 level on weekly closing basis. Whatever pullback action will come will meet to the supply on higher side. On the lower side, the immediate support area is at around 230 level. If it breaks below 230, then it will continue furthermore downward journey toward 200, even 190 level. So our advice is to avoid at this juncture, because stock structure is weak. Even if you want to buy this stock, wait for 265 breakout, then only try to buy this stock, because overall trend is weak for the stock.
Sure. Before I move on to your picks, Rajesh, want to check with you your views on the metal index. We've seen quite a bit of a rally coming on these shares like Hindalco, Tata Steel over the last 2 days or so. How is the setup looking like? Do you expect more upside going forward?
So first we analyze the Nifty Metal Index. Now Nifty Metal Index is approaching to its 20-day moving average, almost taken the support above a 50-day moving average. So which is clearly indicating that near-term setup is suggesting some strength or some buying action is happening in the across all metal stocks. Even in the previous trading session, we have seen most of the metal stocks moved up 5% to 7% in an intraday basis. So looking at the setup, we believe that some more, momentum is likely to continue because short covering action is already taken place in the previous trading session, and some follow-up buying we are expecting in the today's session also. So from a metal space, yes, our preferred pick is Jindal Steel and Power, then Tata Steel, and then Vedanta. These three stocks are looking very attractive from the metal pick, and we believe these three stocks can do well in the today's session also.
Tata Steel, Jindal Steel and Vedanta poised to do well in today's session as well. Rajesh, leave us with some stock picks for our viewers.
So again, from metal space, we are bullish on Tata Steel and we are expecting target of 120.24 on the higher side. Keep stop loss of 105 to go long in Tata Steel. Another stock which we like, that is Adani Port. Stock was in corrective move and stock has taken support from its 200-day moving average. And the kind of reversal we have seen in last two trading session, we expect some more pullback action towards this expiry can be there in the Adani Port, and we are projecting target of 850 to 860. One can keep stop loss of 800 to go long in Adani Port. Third stock is Dalmia Bharat. Dalmia Bharat has given a breakout of its falling channel, and looking at the breakout, we believe that this momentum is likely to continue further higher. 1940 to 1950 could be the possible target in the coming trading session. One can keep stop loss of 1825. And one stock is from cash segment, that is Bajaj Electrical. Bajaj Electrical has shown a falling trend line breakout on the daily as well as on the weekly chart. And the volume action was very encouraging. And looking at the setup, we believe that this stock Bajaj Electrical can move towards 1250 to 1260 zone. One can keep stop loss of 1155 to go long in Bajaj Electric.
Well, these are some of the stocks that Rajesh is recommending this morning. With that, thanks a lot for joining in, Rajesh. Wish you and your team a very happy and prosperous new year ahead.
Wish you the same to Moneycontrol team as the viewers also.
Thank you. Thanks a lot. Well, with that, it's a wrap on Morning Trade. But stay tuned because coming up next is Outlook 2023 with Sandeep Tandon.